Hello guys, Nick Sean here, Mission FX founder, and today we're going to be talking about psychological levels in trading. Now, psychologicals, or for shortened terms, we say psych levels. These are levels that the market interacts with, and they're basically round levels. And every time you see the market come to one of these levels, you'll generally see a little bit of price reaction. Now, the reason these levels are so important is because big financial institutions such as banks, hedge funds, trading floors with huge institutions that trade a lot of capital that move the markets. These people who trade, generally they'll be in trades for long terms, like a long time for each trade. So, for instance, weeks or months, sometimes even years, like if it's like a stock that they're holding on to for a while. And they generally take their profits at a round number just because it's easy to remember, it's easy to put in, and it's just a round number. People like to use round numbers. So, for instance, every 50 pips is what we call a psychological level. So this right here at 133.00, right in here, this is a psychological level. The next one 50 pips up is 133.5. Next one up is 134.0 and 134.5, 135.0, 135.5, 136, and so on. So I'm going to show you how to use these psychological levels. Here's what you're going to be doing in a nutshell. You're going to be waiting for a divergent move to occur at one of these psychological levels. I'm going to walk you through an example. In this example, we had the market run up here, came up here. As you can see, we were above 75 for this first move. Market came down a little bit, then went up more, and then it touched this level right here, the 136.500 level. It tapped it right there. While it was tapping that, if you look down here on your RSI, it was divergent. These two peaks are going downward. See, there's your high, there's your lower high. Up here in your main chart, you had your initial high, and then you have your higher high. This is going up, this is going down. And the takeaway is that this right here occurred right at a psychological level. You would have sold the market here. We're on the hour one chart. I would have set my stop loss 50 pips above, my take profit 50 pips below. Okay, since we're doing every 50 pips. You can even set your stop loss a lot tighter in some cases, but if I would have gotten drawdown, I just would have stacked on this one. This is a solid divergence. So that would have been your sell. You would have quickly gone into profit, and it would have been a good trade. Now, another example. Let's look at this right here. Market came down, made a low. This was underneath the 75 level, or sorry, underneath the 25 level. The market came up, retraced a little bit, came down, made a lower low, came near the 133.0 level. It didn't quite touch it, so I can't say this is a trade I would have gotten into because it didn't touch it. It's still a good divergence though. Let's say we took off all the psychological levels and just traded this based off that low right here. It's not a series of fast candles, so I wouldn't have entered on that, but if it would have come down here and touched the psychological level, based on how divergent this is, we have the peaks going up right here, we have the lows going up, we have the lows slanted down here. This divergence just suggests that the trend, the long downward trend we were in, is now losing steam. And so it would have been good to enter right here on a buy, and the market came up instantly into profit. Or if you want to be, really what you should be doing is one of two things. Wait for this movement down to occur in a series of fast candles. Small candles like this you shouldn't be entering. Those are not what I call tradable. You need like a fast move down, or it needs to come down and touch the psych level. So if it would have touched this or these candles would have been quick, I would have entered. Still a solid trade though. Divergent, market came right up into profit. Now let's take a look at this up here. Had the market come up, made a high right here. So right here on RSI, it's this one right here. Market came down, retrace, came back up and tapped a psych level at 135.5. And right there, if you look at these two peaks are now slanting down. They're downward sloping. You could have sold the market right there, instantly into profit. Like I said, you can hold at 50 pips. Sometimes I'll hold 40 just to take profit a little bit before the next cycle levels hit, so that way you don't have to worry about any manipulation. So 35, 40 pips is generally good, but you can hold 50 if you want. If you would have got your best entry up here, it would have been an easy 50 pips, but like I said, 30, 35, 40 pips, you'll be good. So that was a solid one. We had a higher high right here. It was lower high here, so this is divergent, and right when it tapped the psych level is where you would have entered. So a very small amount of drawdown, maybe 10 pips before it went into your profit target. And 10 pips of drawdown in the hour one is nothing. So then after it would have hit our profit target, look, the market make it another move up and barely tap the 136.0 psychological level. If we look at our RSI, this peak to this peak, it's divergent. These are heading downward. Ever so slightly, but this is still lower. This one is still lower than this one right here. So you could have entered again right here as soon as it tapped the 136 level. So 136, it would have tapped it right there. Very nice, clear V movement. And just the market came down instantly into profit. So it's just that simple, guys. Just take these psychological levels, put them on your chart. How I do them is I just literally take my tool here. Let me go to the hour 4. I take the little tools right here, and then I tap the plus button, and I go to horizontal lines, and I just do the horizontal lines, and I put them in here. So this is 133. Below that, it should be 132.5. You can just kind of drag it right there to about the point. And if you want to get it exact, then you can just double tap it, click edit, and then right here we can just type in 132.5, and then it will put it right there at the right spot. See where it's at now, 132.5. So that's how you add them to your chart. But yeah, guys, this is a very, very effective strategy. If you look even on the hour 4 here, you can see how the market interacts with the psych levels. See, it doesn't always do it, but very often times you'll see price interact with it. So yeah, very solid trading. So you guys let me know if you have any questions about psych levels, and show me some of your trades with the confluence of a psych level. I'll see you guys in the group chat.